President Trump announced vast data center deals in the Middle East. But what does that mean for the chip sector? This is Sectors Up Close, and we're talking semiconductors. Last week, AI was back in the market spotlight. The UAE announced plans to build the biggest data center outside the US, and Saudi Arabia promised to buy hundreds of thousands of NVIDIA's most advanced AI chips, along with striking a $10 billion deal with rival chipmaker AMD. The Philadelphia Semiconductors Index has climbed in recent weeks and is now almost flat for the year. Randy Watts is Senior Portfolio Manager at O'Neill Global Advisors. Randy, how important were these big Middle Eastern deals for the chip makers?
I think the deals were important, but let me say two things to start. Right now, when we look at the semiconductors, there's essentially AI and everything else. So in the semiconductor space, the broad basic industrial chips are not growing that fast. And at William O'Neill and Company, we do have some concern about the Apple supply chain. As you mentioned, though, AI is still growing very fast in terms of chip demand. While the Middle Eastern deals are important, I think what's more important and what's been driving demand recently are the hyperscalers. And those are companies like Microsoft, Amazon, Google, and Meta. And if you look at their spending, many investors were worried that capital expenditure was going to slow coming out of Q1. But we learned on the conference calls that there's actually been no slowdown there. Those companies are estimated to spend about $330 billion this calendar year. And Meta actually increased their capital expenditure budget by about $5 billion on their conference call. So AI within semiconductors continues to be very strong.
How much, though, are those hyperscalers under pressure from their own shareholders to show this vast investment in AI is making them a return?
I think there is pressure, but these companies really view this as a gold rush type opportunity. And so right now they're really committed to continue that spending. And that's going to really favor the semiconductor companies that operate in that AI space.
Away from the AI space, then, let's talk about some of those supply chain concerns that you mentioned. We saw a big dip in chip makers when tariffs were introduced in early April. Where are the biggest vulnerabilities in the sector?
So with regards to that, we've seen the semiconductor index, the SOX, come all the way back from its April low. It's now up about 44%, rallying from there, and it's right back to around its 200-day moving average. That really has been, I think, driven primarily by AI. I think right now the market is pricing in a likelihood of a pretty positive resolution on the US-China trade talks. So there's definitely some positive sentiment in the names right now. However, industrial demand has really been softening on the macro level over the last several months. So those companies do continue to have problems and concerns in the real world with regard to the trade talks. And then Apple has been also seen some slowdown, particularly in China. So companies that supply chips to the Apple supply chain, we do think have some worries.
You think then that this is a sector where you need to be very picky as an investor?
Absolutely. We really favor the growth companies that are expanding or maintaining their market share in AI. And then on areas like analog, mixed signal, et cetera, we're really being more cautious. And what we want to see there is more of a global pickup in economic demand and industrial production to turn more positive on those stocks. We're also still cautious on semiconductor equipment, capital equipment. While the high end is doing well, so selling into areas like TSM, the broader market for semiconductor capital equipment is actually slower this year. So that's another area where we'd like to see more of a macro pickup before we get involved.
When we talk, though, about the US-China trade war, you mentioned even the most advanced AI chip makers are vulnerable there, aren't they? Because, of course, their sales in China have been restricted for national security reasons, and that could happen further, couldn't it?
It is a risk. They have been restricted. We're hopeful that if the US-China trade talks come to a positive resolution, that will get loosened up. But I think also, if we look at what happened in the Mideast last week, with regards to the Trump trip, there is some hope that sales into Saudi Arabia and the UAE can actually offset some of that China weakness and restriction. So while it's definitely a risk, I would say it's less of a risk now, a week later, than before that trip.
That was Randy Watts of O'Neill Global Advisors. Don't forget, you can watch more videos on Reuters.com.